My name is Marta Gawinek de Gargulia, and I represent the Foundation of Women Entrepreneurship based in Poland, Warsaw. Since 2012, our mission is to support entrepreneurial women in various stages of growth of their businesses. So we share the knowledge and competences, we run accelerator program. We inspire and motivate to action by organizing training courses and different kinds of networking events. We also create space for women business angels to meet women entrepreneurs. Since 2015, we coordinate club of individual investors of women business angels. We have so far 7 successes, so 7 successful term sheet signs and investments done. We would like to share our knowledge, especially related to the sourcing. You know that a lot depends on the very project that you invest in. And this is a crucial decision that is to be made by the business angels in what project you do invest and what project is not worth investing. So in frames of this podcast, we would like to share with you some hints, some lessons learned on how to create your own business angel strategy and investment strategy, and what criteria should you pay special attention to when selecting the best investment opportunities. The business angels are affluent individual investors. We call them sometimes high net worth individuals that are ready to invest their private money into startups. From our experience, there are usually either entrepreneurs who made successful exits, or they still run their companies, or they are usually CEOs of big corporations. Usually the business angels, they prefer to go with a group, so they prefer to make group investments and take a smaller ticket. They invest in different industries. They do not cover the whole round of investment by their own. We do not recommend it as a good idea. We recommend to create a group. We recommend to invest in syndicates. It is better to invest in few smaller projects than in one big in order to reduce the risk. And by time, ideally, if you create your own investment portfolio where you have different kinds of businesses that you've invested in, starting with early startups to some more mature. Business angels have financial motivation, so this is the main reason why they invest their money into the project. We find it crucial to make good decisions about where you invest your money and basing on what criteria you make the decision. Business angels and business angel investing is a highly professionalized investment process. We expect due diligence. We want to have an evaluation process. Business angels, they sign the agreements and sign the term sheet. So thinking about your investment strategy, there are different ways of how you can invest. You can invest on your own, so you can be basically the only angel that invests. Call it solo angels. You can invest in a group, and there are also syndications possible. Syndications of angels group. In order to select a good business idea, a good business project, you need to, from the very beginning, have a good access to such business projects. So you need to have a range of opportunities in order to select the best one. How can you ensure that you actually have access to the best startups on your markets? Well, we do a lot to promote our club of individual investors. We use the inbound and outbound marketing, different channels, print advertisements, radio, direct mail, blogs, search engines. We use social media a lot. We also promote business angel investing by educating the market. We create content. Before every pitching, we organize seminars on business angel investing, on how it works. We invite experienced business angels. We invite startuppers. So this is how we educate the market, so that we are visible, so that we build our brand and interesting ideas approach us. Besides this very proactive approach and activities organized by us, we also establish and maintain good contacts with the organizations that are natural space for startup. We keep in touch with universities, with different kind of advisory and mentoring organizations, with startup incubators, with startup accelerators. We are in touch with co-working spaces where many startup founders work from. We take care of our relations with the service providers, so consulting, accounting, legal agents, event organizers. We try to participate in as many as possible startup competitions. We are jury members. We are in touch with business angels networks, including the EBAN network, European Business Angels Network. Keep good contacts with the venture capitals companies, with the equity crowdfunding portal, many other funding providers like loans, funds, grants. We also try to monitor the startup blogs and social network, keep updated on what is going on in the startup market, where are currently spaces where you can find good business ideas. So once you've created a landscape of different opportunities where the founders are to be found, you already have some business projects approaching you, and this is only the moment when you can actually start screening those projects. There are different ways of how to deal with it, how to approach the screening. I will first mention the perspective of the very company. Thinking of your company, thinking of you as individual investor, you can take into consideration the stage of your company. You can have a look on the deal size. Some business angels are interested in a specific sector, so in a specific industry. There might be others interested in region, and other criteria are to be considered, like gender, the innovation in the project, etc. The above mentioned criteria are so-called strategy fit, and only after this the very screening starts. We start with the very business evaluation. So when you receive a business project, there are at least 6 aspects that the business evaluation should be done according to. First of all, it's the team. You first of all have a look on the team of the founders. Then you check the business model. Then you check the market. You basically prove if the market analysis is solid. Then you have a look on the product and possibly the technologies involved in the product. Then there are the financials. And last but not least, you think of the exit potentials and you try to evaluate the exit potentials. We recommend to first focus on the team and to have a closer look on the team of the founders. We believe that the team is always the most important issue in the presented business idea. We usually say that it is better to invest in best team with the worst product than in the best product with the worst team. Why so? Because usually the products and ideas are changing a lot. If you don't have a good team, you will surely collapse. While a good team can change the idea and can improve the idea on and on. And even from very much not ideal idea, there can be something good at the end of the day. So we first look on the team, and what actually do we measure or what do we evaluate thinking about the team? Well, first of all, it's their entrepreneurial attitude, so their motivation. You need to make sure that these are the people that are very much driven by the idea, that are highly motivated. Of course, the founders team would tell you that their motivation is very high. However, there are some questions you can ask, or there are some indicators. First of all, it is very important that at least one person in the team is fully engaged in working on the very business idea. A good indicator is to what extent are the people ready to build their business without salary in the beginning. It is a natural thing that for the first couple of months or years, they cannot expect big salaries because it's this intensive phase of the development of the very idea. You can also measure or evaluate the readiness to actually take the risk and to actually build the business from the scratch. And the second criterion is the balance of the team and their organizational setup. In every team, in order to make the business feasible, there are different skills required. So you need to make sure that there are managerial competences, that there are entrepreneurial skills there, that there is somebody who has experience in marketing. Very often the business angels fail to check if there are enough crucial skills in the team, and they focus a lot on the inventors. So basically people that have a good idea or that they are the authors of the idea. Well, the idea is important, but besides this, we definitely need to have an investor in the team. So somebody like looking for the business, and also the entrepreneur. So somebody who can actually manage the very business, who can organize the very company. Having a look on the founders team, first of all, make sure that there should be a team, that team isn't one person only. It is absolutely necessary mandatory to have at least 2 or more people in the founders team. And this is also mitigate the risks and the time factors. It is very often the case that the one person, something happens and he stops or she stops working on the business. The more people, the more skills and competences are ensured in the team. Furthermore, you measure and evaluate the leadership capability in the team. So you basically check to what extent are they actually able to ensure this authentic leadership and productive teamwork. Then you check the team reliability and commitment. And usually in these first years of the startup, thinking about work-life balance, there is definitely much more work than life. The team needs to be consisting of the people that are ready to leave their comfort zones and to be fully involved in the development of their business idea. From our experience, it is very much recommended to support founders that have no plan B and that invest their own money into the business idea. They are ready to risk their own time, resources, because of course it means usually way more involvement on the side of the founders. Look for the people that are ready to fight for the company. Thinking about the team, you look on the expertise and professional background. It is crucial that founders have at least some previous business experience, ideally with failures or successes, and that they have experience of working together. How can you assess and evaluate the team in order to make the decision if you invest in the business or not? Well, there are at least 5 ways to do it. First is that you look for the references. So you check who have the founders been working with so far, what have they been doing so far, what do others think of them. You check their contact. You also have a look on the previous conflicts. If in the founders team there used to be a lot of conflicts before, it is very probable that it will happen again and the business will fail. You can conduct individual interviews. You can also check the group dynamic. How can you check the founders team that they are team players, that they can actually work together? Well, one of the situation is the very project presentation. You can make sure or you can check if the very team members, if they have a same view on the product, on the market, on the very business. If they do, then it's more probable that they will together as a group survive problematic time. You can also, of course, check the behavior during the meetings and out of business situations. Some business angels invite founders to do some personality tests like Gallup test in order to check if the very personalities they match with each other. We haven't done it so far, but we meet a lot with the founders even before the pitching to check if there is the actual flow and if the group dynamic is okay and if they are capable to face difficult situations that will for sure happen while the development of the business. Summing up team as the crucial point in the screening, business angels believe that this is the team that you should choose and not the very product. The product will change anyway several times. That was it. And that the second aspect that you should evaluate when screening the business project is the business model of the proposed idea. You can use a lot of different approaches. We recommend the Osterwalder Canvas model to check the sustainability of the business, to make sure that the quality of the marketing plan is okay. Track the product strategies. Make sure that the time to get to the market is fast enough so that it will be possible to plan the exit after a couple of years. And you also need to be sure that the business is scalable. So, and there are different ways how to understand that the business is scalable. First of all, there can be some service added to the existing business, which will make it bigger, which will make it targeting bigger market. It can be also about producing some innovative one product that you will not have to invent on and on, but basically multiply and sell. Thinking about product, the business model, you need to make sure it needs to be absolutely clear how are the founders going to make actually money with, and is it sustainable? What will be the product? How many products will we have? What is the cost advantage? This is why the software businesses are so popular customer also in our network. The third aspect that you should evaluate is the market analysis. And here are the 6 aspects to focus on. First, it's the very target market. Where is the market and where are the customers? How will we make acquisition of the customers? The second question is about the market size, how big it is. Third is the analysis of the market trends. If the business idea goes along with the current trends on the market. And the fourth, it's about the demand need. Fifth, it's about the market accessibility. And 6 is about the competition, about analyzing and identifying the competition. Business angels with big experience, they expect that the market will be already very segmented and that the founders will have a precise answer on the question, which segments do you want to target? So it's not only about saying, well, we want to target the people from 25 to 35 living in large cities. It is the segmentation need to know very well your customers, their behavior, their motivation, why they would buy your product. What exactly is the value of your product to them? It doesn't have to be a product only. It's about some specific need or some specific emotion that they get when they buy the product. And you need to specifically know, out of big target group, the market is usually very, very big, which groups do you want to address first with the money that you have? How often will they use, for example, the application? The next point or the next aspect that you evaluate is the very product and technology. Is this the question like what value for the customer does the product offer? For measuring or for evaluating the value for the customer, we sometimes make the so-called pill test. So whatever you produce, it can be thinking about the pills, about the medicines. It can be either a painkiller or a vitamin. And if it is a painkiller, it means that it offers some specific solution to an existing problem. And of course, there is already a demand. While a vitamin is something nice to have, it is more difficult to sell it as a product. Thinking about the product and technology, you think about the competitive advantages of the product. So you ask yourself a question, how much time will the competitors need to copy the product or to copy the solution? How easily it is to exchange the product? How will you protect the competitiveness? How to create the value for the business? Business angels, due to these competitive advantages, of course, they like very much the businesses that are able to ensure the international property rights status, that the patentability is there. Coming back to the product and technology, you also should consider the so-called MVP, so the minimum viable product. We recommend, and from the perspective of our business angels, it is worth looking for products that might not be ideal yet or that might not be fine-tuned yet, and don't look for the very perfect product, but find what is the core function and do not put too much resources and time to create something that will anyway change. This concept of the minimum viable product is about developing something, presenting it, exposing it to the market, and then looking for the response of the market and then reacting on it. So adding the function, checking the product again, modifying the product, then exposing again to the market. So the very product doesn't have to be fine-tuned from the very beginning, and you should consider it as a business angel. What is also important in screening is to think about if the product offers variety in fields of application. Where can we use the product? Is it a very niche only, or maybe there are various markets, channels of distribution? Of course, the more channels, the more ways how the product can be applicable, the bigger probability that you will get the revenue, that you will basically make money, that this will be scalable solution. I already mentioned the international property rights status, so IPR status, patentability. The more unique product is, the more elements of the product can be patented, the bigger chance that it will be a good investment. Next issue related to the product and technology is about the state of development. It should be at least some prototype. It should be some ready prototype. It cannot be on the level of an idea. So basically, the closer to the market, the more market has verified the product, the better. Yeah, so this idea is that you should allow, or the founder should allow the market to enforce the very product. The market is usually right. Yeah, and this is also a crucial competence, a quality of the founders team, that they should be able and open to the feedback of the market. Present it to the market, get the feedback, add functions, modify, change something into the very product. The next aspect that you verify or that you make the screening basing on are the financials. The next webinar will be focused on the screening from this perspective of the financials only. So let me just mention the main points that you definitely should consider when looking at the business idea. First, it's about capital needs. So how much capital do the founders need? Is it calculated to the next round or to the break-even point? Business angels should definitely prove the company's product sales. You should also, it might sound quite early, but you should also already keep in mind while screening when possibly the next round of investing could be planned and who possibly would be interested in being invited. Then thinking and screening the project, you have a look on the financial projections, and usually the financial projections are never realistic. So usually the founders promise the faster and bigger revenue than it will be in fact. And we know it, and our business angels also know it, but we at least ask them to analyze precisely the costs that will have to be faced in the first years of the business. The next issue related to the financials is the BEP, so the break-even point, which is understood as this moment where we have revenues that allow us to cover the costs, and what's the amount of sales. Also have a look on the cash flow. So usually the business angels, they do not put all the money at once, and they usually make installments, and it is important to have a clear understanding from the very beginning how the cash flow from the side of the business angels will look like from the very beginning. So usually, as the founders business angels, they do not put their money up front, but in installments. Have a look on when those installments are actually expected. Yes, and coming back to the exits, which is also something you plan beforehand, possibly when screening, thinking about the business project that were proposed to you, try to think of the potential exit path. So who would potentially be interested in buying the project? What would be the estimated timing? When you think of organizing this next round of meeting with the investors, you should plan it at least 3 months earlier to organize the next round. We do recommend a genuine screening of the business idea. Robert Wildbank said that those investors who spend at least 40 hours or more than 40 hours doing the due diligence, they experienced at least 7.1 times multiple revenue. While those who invest spontaneously, well, they can be happy if they get back what they invested without any multiplication. So you definitely have to know the business. You definitely have to plan your own investment strategy before investing the money. We would also like to propose you a quick test for investment readiness, the business-wise investment readiness check. So thinking back or while receiving a business proposal or business project, you first of all check if there is a strong business case, even if you have a good team, which goes always first. There is a good team. There should be a strong business case. There should be an already working prototype. There should be a precise plan how to grow the company in quite a quick time. There should be from the very beginning some exit perspective. That was this business-wise investment readiness. So once again, there is a good team, there is a strong business case, there is a working prototype, there is a clear plan how to grow the company, and there is a clear exit perspective. While personal-wise investment readiness is something slightly different, as much important as this business-wise investment readiness. Thinking about the investment readiness of the business project, you need to have a closer look on the founders and ask yourself a couple of questions. First of all, is the founder willing to have additional owners involved in the strategic decisions? Business angels, they do influence the decision making in the company. They sometimes the leading business angel is a part of the board of the company. So you need to be sure that the founder is actually willing to share his or her power in related to the decision making. You need to make sure, and this is the second point, that the founder is coachable, that the founders, they are eager to listen to mentors and to the board members and to the investors. Very often they are resistant to the advices from the outside world, which is already not very much promising when it comes to the business angel investing, which is not only about investing the very money, but it's also about the smart money. Checking this personal aspect of the investment readiness, we like to have founders that invest their own money in the very business. This is for us a great proof to what extent are they able to risk. Are they able to take a risk? Are they personally committed to the development of the business? We pay attention to that the founders are not overconfident. And this is something that people usually criticize, but we do admit that the founders, they need to be self-confident. We all know that it's a crucial competence and a crucial quality needed in the business. What we mean by overconfidence is this resistance to advices from around. This is this resistance to the feedback from the market. This is basically this position, I have a good idea and the product will be successful no matter what. And the last quality, personal quality crucial for checking or evaluating the investment readiness is the founder should be ready to step back from the CEO position. After a while, when the business will get developed, will grow faster and faster, we can come to the point when we realize that the founders are not the best candidates for the CEO position, so they are not capable of managing such a big business. And many founders, they find it problematic to leave their positions as CEO. So it is very important from the very beginning to make sure that the founders are able to accept such a option that they are not CEOs anymore. So summing up, we've mentioned different aspects according to which you should evaluate or you should screen the business project. We also suggested you making a quick test for investment readiness, business-wise and personal-wise. And what comes next is the valuation of the financial aspects of the business projects. These topics will be covered by the next podcast. I thank you very much and I wish you best of luck in screening the best investment opportunities.